So imagine every apartment owner that has a variable rate note has a plastic bag over their head.
It's not good.
I have it. I have 10 of 24 deals where I got a plastic bag over my head. That means my rate has moved. Some of the deals have what's called a rate cap, which means it doesn't go past a certain number, but they're still paying. But that rate cap will end. Other deals are exposed naked. Like, you know, hitting 6th Street and not doing it the right way. You know what I mean? Like, yeah, it's just, you got problems, sir. You did not take precautions, and that's what we have in the market. All right, everybody. Hey, thanks for joining us today. We're super excited. Is it on? Okay, it's on. Okay. So if you're interested in owning apartments, anybody own apartments right now? Okay. Are you interested in becoming a passive investor, learning about apartments? Because if that is the case, this is the room. This is the room where you have operators of the year up here. Like, this is a really strong panel because you've got people that have won multiple National Apartment Association award wins. People that have, like, between just John and I, we probably have over 40 different Apartment Association awards. Yeah, probably 50. There you go. Association awards, right? So this is where you want to sharpen your mind a little bit. We're going to talk about the state of the market today. My name is Robert Martinez. They asked me to moderate here. I have roughly 5,000 apartment units that I own and manage. I've been doing this since 2007, so I've seen a few cycles, just like the one we're in now. So this is an important year. This is what we're going to have is a down year. You have your wins, you got your peaks, and you have your valleys. The reason why there's a valley this year in 2023 is because the Fed, in their infinite wisdom, paper doll guy named Jerome Powell, decided that he wanted to fix inflation overnight. So what he did was he raised interest rates, what it feels like overnight. So where this was a variable rate environment, where we were looking at 2 and 3% loans, you know, I now have loans that are 7%. And how do you manage that, right? How does your mortgage payment double overnight? And it's not supposed to. You know, when we buy an apartment deal, you underwrite for maybe a +2 on interest on your back end 5 years from now, 7 years from now. You don't expect it to happen in less than a year. We literally saw a 5% spread, a 5% movement in the interest rates. So if you're a fixed rate guy, hey, good for you. How many of you all bought a house in the last 24 months and you fixed it? Good. You got some tremendous rates. What kind of rates did I get here? What did you get? 4. What did you get?
5.5.
You got a 5.5? You must have done it more recently. Okay. How about you in the back? Who raised your hand? Yeah. What was your rate?
5.
Okay, 5. Most people got it under 4, like everybody else 24, 36 months ago. And that's what we're having today.
Yeah.
So today we're in the market of survive. This is the absolute wrong time to sell an apartment deal. Absolute, because you're gonna get crushed by every bottom feeder in the planet looking to take advantage of you like they're a vulture circling. But this isn't the same market. You know, when I got started, I bought a deal in 2007, 2008, before the crash. Significantly different after the crash. But what was different was the rates. The rates that we have for apartments, I'm talking about the rates, I mean the rents. The rents are much higher today than what they were then. Unemployment was much higher than it is today. But the same situation, you have banks failing. And you have banks buying other banks for pennies on the dollar. We just saw UBS buy Credit Suisse for $1 billion when they were worth like 17 billion. And if you go watch the movie Too Big to Fail, this is happening again. But what's going on here is that this too shall pass. You just have to wait this out. So imagine every apartment owner that has a variable rate note has a plastic bag over their head.
It's not good.
I have it. I have 10 of 24 deals where I got a plastic bag over my head. That means my rate has moved. Some of the deals have what's called a rate cap, which means it doesn't go past a certain number, but they're still paying. But that rate cap will end. Other deals are exposed naked. And you're asking, well, why didn't you be like John? Why didn't you do it? Well, because nobody was doing that like John. John's a very conservative approach. The 80% of the market was doing variable rates. Blackstone, those guys, they had variable rates. All these guys had, that's why you probably don't hear it, but they declared. They gave their properties back. Many of the big players, Fairfield gave their keys back. KKR, all the big players. Because when we're doing a deal, we do our initial underwriting. and it passes. When we go to a mortgage broker to get the loan, they do their underwriting and it passes. Then they go to the lender, in this case, let's say it's a JP Morgan or Goldman Sachs, or I've got loans with MF1, Capital One, various players. It passes their test. And depending on where you were in the market, they said, yeah, this is good, you don't even need a rate cap. And so you move forward, and then they sell it, they package it in a big portfolio of other people, and they're like, yeah, this looks good. So don't anybody shit you, okay? Nobody knew this was coming, because nobody saw 5% happen. I don't care who you are, they're lying. They're lying. But it's better to have your money in apartments than it is in banks. And I learned that lesson back in 2007 to 2008. It's better to have it in apartments, better than having it in stocks, because it's just a paper loss. I'm not selling today, so I don't need to recognize that value. If you put your money in one of those banks, look, the FDIC has 250 billion. That's it. With a credit line of another 100 billion. That's it. They can handle the 4 banks, and that's it. One more bank goes under, we're talking chaos. And the big banks are gonna have to wear everybody else out. That's the market we live in today. So back to the plastic bag of theory. You only lose in real estate, this is important, you should write this one down, is when you run out of time or money. Same principles in Vegas. You only lose in Vegas if you run out of time or money. That's why Vegas always wins, because they have infinite time and they have infinite money. So what we're doing today is everybody that's an apartment owner that has variable rate is becoming a better owner overnight. Necessity is the mother of invention. But we have a lot of challenges that we didn't have in the previous recessions. We have monster payroll expense for less talent than what we had 10 years ago. We have monster insurance, property insurance is through the roof. You're having to take really high deductibles just to make it breathable. And what happens if you do have a fire? What happens if it's a mini fire and it doesn't hit over 100,000? You're holding the bag on that. We have property taxes, which are pretty much Nazis, because they will play games with the money. They have a whole floor of assessors in Harris County looking to try to find out what your real value is. And as apartment owners, we're here trying to protect it. So our number one goal today, look, our goal has always been to try to appreciate the capital. If you own real estate for 10 years, you will win. 100% certainty. There has been no 10-year cycle where real estate did not win, just like the stock market. Real estate will win. You know why? Because inflation is real. I bought deals in 2010 for $24,000 a door that I still own today that are worth $120,000. That same dollar in the bank, guess what, is the same dollar in the bank. But how much purchasing power have you lost? Warren Buffett, smartest guy in the world, right? The richest man in the world, has seen 96% purchasing power of his dollar the day he was born versus today. You have to have your money in a hard asset, in a real, that's why it's called real, a real asset. Bricks and sticks. So every sponsor today is always there to grow your capital, but he's there to protect your capital. In today's conversation, and thank you again, because we got a pretty good group here. Thank you again for being here. We're gonna talk how to protect your capital, what the best apartment owners in this city are doing to protect it. So I've got a list of